What's up, everybody? This is Misael Gonzalez. You're watching Wall Street Saturday, a show about God, investing, and stocks. Our show is for educational purposes only. We're not financial advisors. So go ahead and enjoy the show. Share it, like, subscribe, and hit the notification bell to be notified every time a new video comes out. Thank you.
Hey everyone, how's it going? It is April 30th and another Wall Street Saturday. A lot of stuff has been going on in the market this past week and even today. Today, Berkshire Hathaway is holding its shareholders meeting with Charlie Munger and, of course, the legendary Warren Buffett. More on that in a few moments. But first, introductions. I'm Joshua Trusty.
Misael Gonzalez.
And I'm Josh Flores. Like Josh Trusty said, we want to get some coverage here of the Berkshire Hathaway. But of course, before we even get into that, I just want to pray us into a good start to our day. Heavenly Father, we just thank you for another Saturday that we get to come together and talk about the ways that you've been making our world and our lives kind of move in motion. And we just thank you for this opportunity, and we give you much praise and glory. And it's in your holy name we pray. Amen.
Amen.
Super cool. So as Josh had mentioned, the Berkshire Hathaway annual shareholders meeting is going on. I'm assuming that y'all can see my screen here.
We can.
Yeah, perfect. And so you can see this is actually live updates from CNBC right now. There's a lot of drama going on. I'm going to refresh the page real quick just to kind of get some of those more recent things going on here. Yep, see they're still going on here. Warren Buffett, Charlie Munger here. Buffett says he has never been good at timing. Obviously, that's a funny thing that he says there, because we say a lot of times here on this channel even that it's not about timing the market, it's time in the market. Some of the other headlines that were here were kind of fun. Obviously, Berkshire has a huge stake in Geico here. So you see our Geico little gecko there. This is some interesting things that it looks like some people, I think that there were some large shareholders that were calling that they should have a separate chairman and CEO. Currently right now, Warren Buffett is the chairman and CEO. And so for some of those that might not be too familiar with it, the chairman can actually appoint the CEO. So Warren's in a very powerful position right now in Berkshire. So it's interesting to hear what the shareholders are kind of thinking about that. There are some other really interesting things you see here. Charlie Munger says that it's a mania of speculation, and we were talking offline about this and how it's just kind of funny because we feel like this is more of a comment for 2020, maybe 2020, 2021. I feel like just with the way that things are going, yeah, sure, maybe there is some speculation, but I feel like people can really rely more upon the fundamentals today. But I'm not going through each little detail here. This is a very interesting thing too that Buffett is saying, is that he says that he's finding a lot of trouble finding the right businesses to invest in. I can almost guarantee you that come Monday, there's going to be some turmoil in the market, an already beaten down market where the S&P is down 13% year to date. If the most successful investor in the world is saying that he's having trouble finding businesses to invest in, I'm sure that the rest of us too are finding troubles finding things to invest in. But if he's saying that, oh man, I could just see how things are going to be reacting on Monday.
Well, and also a quick comment on that too.
Yeah.
Warren Buffett is known as a value investor. So there's been a lot of, and he's also been complaining previously too about a lot of speculation in the market. So when he says that he's finding a lot of difficulty in finding businesses to invest in, what he means that is that there's a lot of speculation going on, and the environment in the market currently isn't tailored to his preferences. So all the other ETFs or like funds in general have actually thrived in environments where there are more speculation. Like for example, ARK would be a prime example, which is like headed by Cathie Wood, and so like she's benefited quite a bit from speculation, whereas Warren Buffett tends to go with things that are undervalued by the market, and he just invests for the long term, which is why he also mentioned previously that he doesn't really he's never really been good at timing the market. So he's mainly looking for value investing, and he's finding it difficult to find good value opportunities.
Yeah, I mean, I can agree with it too. You know, I mean, I don't know if you guys too also feel that way, but I mean, the market is just completely red. I mean, I saw another article about how the Nasdaq had its worst month since 2008. So tech is obviously driving this quite a bit. Excuse me, but Misael, I think Misael did some research finding us some of the things that our boy Mr. Buffett had been saying last year. I mean, do you have that article by chance?
Yeah, that's a good point. I do. Let me share it here. Okay. So yeah, Josh showed us the first article. But this is what he said a year ago, which is that, you know, Warren Buffett felt at that time, which was in March of 2021, that people shouldn't bet against America based on the fact that, as he was quoted here, saying that in his brief 232 years of existence, there has been no incubator for unleashing human potential like America. So that's obviously a good contrast of what he's saying at the moment. He's not necessarily contradicting himself, but he's saying that, you know, like Trusty was saying, he's a value investor, but if he's having trouble finding those plays, then it may be a signal that I guess the objective of investing has changed a bit from actually making money over time versus making quick money in a few days. But looking at, you know, I was just thinking about, you know, is it true that more people are in the market just to speculate? Because that would be a good, you know, that would be a good measure to see if there are more people in the market just to make a quick buck, or whether that has remained the same. And I was able to find this chart from Gallup. Obviously, they run they're reputable polls. And this says here, you know, what percentage of Americans own stock? And this is from August. It was updated August 13, 2021. So as you can see from the chart here, going back all the way back to 1999, 60% of people said yes, versus 56% of people saying yes in 2021, with an obvious dip post here, the Great Recession at a low of 53% in 2013. But this is kind of something that I was interested in looking at, because obviously, like, you know, I do gotta agree with Warren Buffett when he says that it's kind of turned into some sort of gambling parlor, because I do remember it was like in the middle of 2020, I was getting into an Uber, and the Uber was asking me was actually trying to give me stock recommendations, you know, stock picks. And I thought, well, that's interesting. You know, when you're getting recommendations from your taxi driver so confidently, then that's not a good sign. But look, everybody knows that, you know, these dating apps are like the thing to do nowadays. I personally am on Hinge, and I've seen a few of those girls be like, hey, you know, teach me something about the stock market. Like, what, you know, like this girl, you know, she's trying to get, you know, investing advice from a possible, you know, date versus actually reaching out to a financial advisor. I think that's just like a sign of the times. It's just interesting how it's just gotten a lot of attention because of all these meme stocks. But that's probably, you know, maybe true, maybe not. I mean, I think this chart that I showed up on the screen here from Gallup tells us that, you know, we're right about the same amount of people investing since 1999, but gotta agree that we've seen some crazy moves lately, partly driven by speculation for sure. So,
well, I kind of thought that the reason why things were kind of going crazy is really because of things that we can measure, right? We know that the Fed policy is like changing. We obviously know that inflation is going rampant, and obviously that war in Ukraine or Russia that's kind of like been dying down. It's obviously still going on, but we're obviously seeing like higher commodity prices. I know that they're like a big producer of that in Ukraine. Also, like I think that China is kind of coming on the tail end of their lockdowns. I haven't really checked, but I think that they're still in lockdowns. And obviously that has like a huge part on our manufacturing and supply chain. And so I know that not to make jokes or to bring this up, but you know, Fed Jerome Powell would always say it's transitory, right? So is he right? Do you guys think that he's right? I mean, he hasn't been saying it lately. I'm sure he's been getting a lot of heat for it, but I mean, do you guys agree? Do you guys think that's, I mean, last week I think we talked about how inflation wasn't like, you know, it's going to come, it's going to go past, you know. Is this just a moment in time that we're going through, that we have to go through some growing pains? You know, obviously we're learning from some of these lessons of all this money that we printed. The Fed actually has their minutes coming up next week on May the 3rd and May the 4th. They'll be speaking, and maybe we need to have a special Wall Street Wednesday or Thursday or Tuesday. I think it's actually.
Yeah, I think you're right in saying that the Fed obviously hasn't really helped the situation, but something that I was also looking at was the multiple, right? The multiples at which, you know, stocks trade relative to their future earnings.
Yeah.
And if I can break this article up, we have seen like pretty significant compressions in the multiples recently. And obviously some of the factors that, you know, CNBC states here is that long-term interest rates are rising, so that will lower acceptable, you know, PE ratios and cause multiple contraction. So something else that they said was these multiples have begun to reverse after a 12-year period where they slowly expanded, in some cases dramatically. And I think that refers to the amazing bull run that we had post Great Recession, and you know, it's been the biggest bull markets since the history of the stock market. So I think a sign that things are changing is that it's, you know, usually you could find places to go and, you know, kind of protect yourself against changes, and you're finding less and less and less places to go, you know. So it's just like when you see negative, you know, news across all aspects of the market, I think just tells you something's going on, something different.
Yeah, I think to answer like the question you posed originally, Josh, is that this inflation is not transitory. I think Jerome Powell himself would even agree with you on that. In December of 2021, he actually said that it's probably a good time for the Fed to retire the term transitory. And so at that point, he was recognizing that this inflation and the supply chain issues were not necessarily just transient, but they're actually going to be ongoing. And I think that's also been translating to like the Fed's approach in raising interest rates. So yeah, I think like these factors are going to be going on for some time, but you know, so I think this is also what we're seeing, like in terms of like the macroeconomics. This is probably what Ray Dalio would call a deleveraging. I don't know if you call it a
deleveraging.
I don't know if it's like really beautiful. I don't know if anyone really looks at like, you know, the PE ratio compressions and just like sheds a tear. Oh, just so beautiful looking at all these PE ratios come down. Maybe it's because the price has come down and they're losing money in their stock. I don't think I for one am not shedding any tears of joy for that. But I think, you know, it's good to keep like the long-term view, even though, yeah, we might be going through a period of deleveraging. It is like Warren Buffett does say, it's difficult to time the market. He's not really, never really been good at timing the market. So in short, I think, you know, being consistent in the way that you invest, putting like your time in the market rather than trying to time it is best. So if you have like stocks, it's not time to just like pull the plug and just pull out entirely out of the market. I think it's just time really to be patient and wait for greener days. So wherever you do.
I was gonna just say, man, I mean, are you still going for UPRO, TQQQ? You're still in those? Would you still recommend those? I mean, I think I saw a message from you earlier this week about buying a dip still. And the only reason why I ask is because now the S&P is like at a all-time low for this year, right? Like it's testing that 10%. I think it's actually down 13% year to date. But
yeah, it is. I would say that I have bought the dip for UPRO. I am very bullish in the long term for the overall economy, like long term. Although right now it's not so it seems like it's like so rosy right now. So I mean, although this is what my dad always has told me, like when it comes to the stock market, when there's blood in the streets, in other words, when the stocks are all red, that's when you buy. So it's like buy low, sell high. It's easy advice to give when things are green, but actually buying when the stocks are super low, you're getting like those really compressed PE ratios. That's challenging on an emotional level. Rationally, yeah, it seems like a good thing to do, but it's very difficult to do when it comes to actually executing on buying low and selling high. So whatever you do, guys, stay long. You're probably not green right now, but stay long, buy the dip, and stay green in the long term.
Hey guys, thanks for checking out the video this week. If you haven't already, please like the video and subscribe to the channel. Every week we're going to be uploading a couple of videos every Saturday of opportunities that you can take advantage of in the markets. Thanks again and have a happy trading week.